Let's now focus on our NBFC. Rajesh Sharma, MD at Capri Global, is now with us. Rajesh, thank you so much for taking out time for us. You've done another co-lending partnership for housing loan. Can you just talk about that, the scope for that? And, we've increasingly seen since the IL&FS crisis, that co-lending, doing more partnerships with bigger banks, bigger players, bigger reach players is probably the way a lot of NBFCs are going ahead. So will this trend continue?
Yeah, good morning and thank you. I think co-lending is the collaboration between a bank and NBFC about low cost fund of the bank and low operating cost of NBFC and better collection efficiency in these segments. Plus, there are certain segments where only NBFC can reach, bank is not able to reach. So it is a way of addressing that segment of the borrowers also where bank wanted to serve them the low cost fund loans. So I think it is a collaboration where both the NBFC and bank are having a win-win situation. If you look at going forward, once technology becomes able to onboard the customers of NBFC directly through system which integration is in work in progress, I think this will become the way where NBFC need not to depend on the borrowing, but they can depend on the partnerships. So they can leverage their distribution, they can leverage on their collection efficiency and tailor-made underwriting models, and they can access to the bank's low-cost fund. And plus, bank will be able to monitor the portfolio very closely because every account performance of delay or check bounce or on-time performance will be reflected in their books as well. So I think it's a fantastic approach and it is going to make both the NBFC and banks winner in this. So at Capri, we have tied up in MSME with the largest commercial bank of the country, State Bank of India, and also with Union Bank of India. In housing finance, we are tied up with the State Bank of India. And in fact, in co-lending, we have already disbursed close to about 60 crore rupees. And going forward, I think we should be able to achieve, we are aiming to achieve a run rate of 100 to 125 crore per month in this segment, which we hope to achieve from the May or June onwards. So we are very excited about this partnership and this will bring our operating costs lower. This will increase our access to those customers where sometimes because of the interest rate competition, we are not able to address their demand. So I think in every sense, it is a great partnership and we are quite excited about it.
Right. So, sir, one, of course, is the growth parameter that you just pointed out and, how things are looking better on the growth front, opportunities with tie-ups, with rural India doing better. But on the other hand, we also have this situation globally where rates are expected to go up. What does that mean for a company like you? Can cost of funding go up? Can it be passed on immediately?
If the cost of fund go up, we are able to pass on them immediately. While banks have a MCLR reset after 1 year, when they disburse the loan. So it can increase only when the reset is due. It cannot be increased any given point of time. And the bonds are of in any case, fixed coupon and a fixed tenure kind of a situation in every sense. So I think if the interest rate, even they go up, the kind of customer we service, they are more focused on getting the timely money rather than the 25 basis plus and minus. So I think it is not going to impact, and we are in past also in post IL&FS crisis when the interest rate have gone up or the risk spread have been increased by the banks, we were able to pass on to the customer. So I think this is not a big worry.
So, would the corollary of that, Mr. Sharma, be that you will continue to be able to pass it on to the consumer? The customer?
Yeah, we should be able to pass on to these consumers. We can always increase the risk spread and we can pass on that 25 basis or 50 basis, whatever the cost of fund goes up.
Now, when we talk about lending, we really have to talk about technology, right? The new age companies, how they're fintechs, how they're trying to disrupt the space. Tell us how you have adopted tech. What are the new initiatives that you folks have come out? How is it changing disbursements and your business at large?
So technology is in a kind of segment we cater to where customers don't have majority of customers don't have adequate income proof while they have a bank account. So our visiting customer or underwriting part cannot be changed with the technology. But what technology we have adopted is onboarding the customer, video KYC, offering them the digital way of making the payments. Plus, we have set up about six people team on data science analytics who analyze the data of the customers and pinpoint which are the customers which are good for us in future. We tweak our underwriting policies. Plus, on collection data analytics, we are able to predict the early warning signal of the stress and we take the appropriate steps. So, technology helping us to onboard the customer, data science is helping us to take the decisions either tweaking in the policy or on the collection, making it more efficient. Besides, now technology is also we are implementing in our new product which we are launching, the gold loan. We are foraying into gold loan from the first quarter of the next coming year. We believe that gold loan is also exciting opportunity for the kind of customers we deal with, where they need immediately cash against the gold, and we are able to provide it within 10 minutes. So that is the aim. There we are building the technology in terms of the entire processing and backend. So technology is playing a great role, but we are not in the segment that we can disburse loan in 10 minutes, but backend entire processing is happening on the technology through loan management, loan origin system, data analysis, and all onboarding the customer. Our entire sales team have the sales application where they are able to feed all the information along when they are discussing with the customer. So they need not to bring the physical copy at office. So that way there are various applications we have implemented. Now customer app is under development, which we should be able to launch by the beginning of the second quarter.
So when we just, really look at what's happening as far as the NBFC pack is concerned, you think small ticket size loan, MSME loan, small ticket size housing loans with better reach, that is the way ahead to grow in MSME, because large size loan or big capital intensive loans are still when they continue with, only with large banks.
So I think approach we follow at the Capri that when we borrow the funds from the bank, we have to find a segment where those customers are not serviced by the bank. We cannot have a business model borrowing from the bank and trying to reach to the customer which can be serviced by the bank. So clearly adopting this approach, we are servicing and catering to the segment of MSME customers where average ticket size is less than 20 lakh rupees, in affordable housing segment where the average ticket size is less than 15 lakh rupees. And these customers do not have adequate income proof to become eligible for those loans for that. Sometimes they are not able to get from the bank what amount they need, and some of the incomes are not able to assess by the banking system because of the lack of income proof. So clearly, we are complementing to the banking system by reaching these kind of customers. And I think this is the way for all the NBFC to follow, that create a niche in some or other product where banks are not there. And those are the segment where large opportunities today exist. If you talk about MSME, I think more than 51 million customers are there who are not able to access to the credit from the banking system. So there's a huge gap and huge opportunity exists for NBFC like us.
Right, sir. Thank you so much, sir, for taking out time for us. Any other development, hope you would again come and talk to our viewers.